Hello, everybody. Welcome to Wednesday. The S&P 500 was up almost 1.1% today. Wasn't able to do the video yesterday, was down yesterday, but this is kind of an important point. We've seen a pattern here that I've seen several times before that leads to at least a short-term recovery. I've actually seen it come all the way back to new all-time highs. Be a little surprised if that happens this time, but nonetheless, it'd be nice to see some bounce here. You get two up days in a row, which is important. We had two strong up days, Friday and Monday. Then you get a down day like we had yesterday, but you don't set a new low, which we did not do. And then we start to rally off of that. And so, that pattern's actually pretty powerful. If you look back, you can see some different examples of that in the past. Certainly, we'll see what happens going forward. But, what happened to kind of catalyze this motion was really just the Federal Reserve. They met yesterday and today, came out and said they're not changing rates, which was not a surprise at all. That's exactly what everybody expected. But they also do once a quarter what's called the Statement of Economic Projection, and included in this is what's called the dot plot. It's all the Fed governors kind of guess where the rates are going to be, the end of this year, the end of next year, et cetera. And they were guessing a little bit higher as far as that goes compared to where it was in December, which makes sense because we've seen a little bit of uptick in some of these different areas. But they were still saying that they were expecting two rate cuts. I think the market probably is rallying off of that to a certain degree, just because with a little bit of uncertainty having to do with tariffs and some clicking up here in the inflation rate, maybe there was some expectations that they might start to say, hey, we're going to cut back on that and only do one or zero or what have you. And so the market, kind of jumped. It was actually up about 1.4% at one point today, which is pretty nice. So again, there's some dip buying that's going to come in. We'll see how this plays out as far as that goes, but not a bad time, for us right at the moment to kind of see that dip. We do have a seasonality that's coming in here. Here we are on the 19th of March. April is the tied for best month since 2004 with November. And so, money's going to come in. I wouldn't be surprised to see this continued, motion with this market, just because there's going to be a lot of cash flow that comes in and people continue to, buy that dip. And maybe these quant funds that drove the market down start to get on the other side, and you could see actually a pretty strong movement to the other side to come up as they come back in. So, we'll see what happens. But nonetheless, that's what happened today. Not a bad day at all. Look forward to being able to see what's going to happen tomorrow, see if there's some carry forward and if this continues to kind of catch some momentum as far as that goes. So look forward to talking to you then. Thank you.